There's a lot of action in the mid-cap. Logistics stocks also doing very well. Let's move forward and get our guest of the show and take the discussion on markets forward. Jaspreet Singh Arora is joining us. Jaspreet, on the one hand, there is massive left-out feeling in the market. On the other, the question is whether India can outperform or continue to outperform the world. There are so many global worries. How long can we stand out on our own? Which side are you, looking at?
Hey, good afternoon, Ajay, and thanks for inviting us. So, the India has been outperforming and rightly so, for all the reasons that we have, over the years accomplished. So let's be, reasonable enough forex reserves, a very strong currency, high GDP growth, low inflation, and domestic economy, still to show the deliver results which it's capable of, and probably third quarter, fourth quarter, we'll see the glimpse of that. To what extent can it continue? So, mind you, we are not anywhere breaching the high valuation zone, which is typically 20 times or more. So had the market been around closer to 19 or 20 times, we could have been in that danger zone, which is, so let's say ballpark 1,000 rupee EPS, F24, at 17,500, we are still at 17.5 times. So I think still we have margin of safety there. So don't see any reason to panic.
Jaspreet, how did you analyze the commentary coming in from Mr. Gautam Adani regarding the, this fundraising round and what they aim to do with their cement business? Not about stock, but you've seen the sector long enough. I want to understand the kind of ambitions they have. How do you see that doing to the sector?
So, before I start on that, just a quick disclosure. Any stocks that we would be talking about today, we'll have to please use your own discretion and take help of the advisors. And fair to assume we would have our vested interest in some of them. We and our clients would have positions in them from a long-term perspective. So on the sector part, Ajay, clearly, M&A has been one of the pillars of growth. When I say growth, I mean the shareholder, the value creation. And we've seen glimpses of that again after a long time. Earlier, the names like Shree Dalmia, UltraTech, they were always there, and now we have that Adani coming in. Mind you, they're still on a 1.5 year forward basis. They're still going to be half the size of the Birla Group. So 140 ballpark Birla Group will be, UltraTech Group will be there at 1 million tons by March 24, and ACC Ambuja combined will still be at 70. It will take them a good 5-6 years before they, bring out their, next 10 million, then 20, and then 30. So that's one. Second is, the synchronization that they have, or the advantage that they have because of their presence having in logistics, port, commodities, etc., that obviously will come out to play beautifully. But mind you, I just have one point here to make. The cement is a regional thing, is a regional commodity. It's not like a pan-India. So every region they go, they'll have probably 5 or 3 or 4 same players and 5 or between 5 and 7 unique, distinct players to combat with. Right? It's not that you're playing on an all-India game and you can have the same. So you need to have your balancing act in all the 5 regions amongst the top 10 players, 3 or 4 common, and 6 or 7 being the regional Goliaths there, like Aramco, Dalmia, India from south, right? So it's like that. But I think for ACC Ambuja shareholders, it's a very good welcome move, because those share prices were languishing, and with Adani's the firepower, and both in terms of balance sheet strength and the way they want to grow, this is surely a welcome sign for and needless to say, of late some of these smaller companies are also showing some bit of activity after a long time, just based on that hope that they might also get acquired by Adani or somebody or the other.
Right. What about logistics space? Last couple of trading sessions, including today, the logistics policies seem to have sparked a good move in many of these logistics stocks. Do you like this space, and what are your thoughts on the policy?
Not much. Ajay, we still yet to figure out. So we run a concentrated portfolio of 20-25 stocks, so it becomes difficult to have a pie in some of these smaller spaces like sugar, paper, textile, logistics, etc. We yet to have a meaningful presence in this space. We are more or on the discretionary and the smaller names, more on the consumer discretionary. We have a tons of presence in the smaller buckets.
Jaspreet, how's your portfolio looking right now? What kind of themes are you playing in this kind of a market? More domestic oriented?
So the top two themes, I would say, first would be BFSI, and obviously it's come up after a long time. There are reasons like the NPA cycle is quite turning around. Much of it has been written off. Credit growth after 9 years, it's looking like a 9-year high, closer to 15%. And also the commentary that you hear from some of the managements is also all pro growth. So they are all talking of 12, 15, 18, 20% credit growth kind of numbers. And lastly, there's this sub-segment of financialization of savings that we like. So this entire piece, BFSI is definitely going to be right up there. This is closely followed by consumer discretionary, and there are tons of opportunities here like footwear, retail, apparel, QSR, multiplex, on the hotels, etc. On the semi-discretionary side, and on the ultra-discretionary also you have those white goods and automobiles to play. So this pack we are probably the most overweight, and this is definitely the number 2 there. And then lastly, I think where we are significantly bullish is the manufacturing and including the industrial capex. Within manufacturing, so far it's largely chemicals, which is where we think there is a comeback. We look at what energy prices, the way they are behaving in Europe. Earlier we were just talking about China plus one. Now there are talks of even some capacities, even though temporarily, but maybe over a period of time, we don't know. There might be a permanent shift. So some of those demand centers, if it moves out from Europe to some parts of India, be it select pharma or chemicals, that's going to be a long-term booster. And finally, on portfolio construct, in terms of the market cap, I think we are the most overweight on mid caps in the last couple of years. So we would be significantly overweight on mid caps, followed by large caps and followed by small caps. Mid caps overall, whether you look at 3 years, 5 years, 10 years, they have significantly outperformed both large cap and small cap. So it offers you both the alpha, a good balance sheet, good high promoter holding, low leverage, and the liquidity. So it has a perfect mix of a small cap, the ingredients of a small cap and a large cap. So I think from a long-term portfolio construct, we are very positive on that mid cap basket, which is between the 10,000 to 30,000 crore market cap.
Right. All right, Jaspreet, thanks very much for your time.